Hi guys, welcome back to another week of Mortgage Matters in Minutes. Again, I'm your host, Brent Rasmussen, and today we are going to speak about what are the different types of refinancing. And this question comes up a lot, whether the market is great because interest rates are low or whether you have a lot of equity and you want to take out some of that equity to finish off your basement, to pay off bills. Or you might be possibly going through a divorce situation and you might need to refinance to get the home and the loan in a particular person's name per the divorce decree. So today we're going to talk about the three different kinds of refinancing, and they're all different in that the interest rates can be different, the closing costs could be different, and why would somebody first of all refinance? And again, we just chatted about that, is that as interest rates drop, they will here this year again. We'll see more clients that will want to take a cheaper interest rate, which would then lower their payment. Or as opposed to maybe taking a cheaper interest rate, you might want to just shorten the life of your loan or pull cash out to pay off bills, do things like that, or again, have a divorce. So those are the reasons why people refinance. And I know many times the question comes up is this a really good time to refinance or not? And a good mortgage lender, great mortgage lender, is going to be able to calculate that and show you what the break even is, the benefits are, because many times refinancing takes a certain period of time for it to make sense. And many times we ask clients, hey, how long do you plan on staying in the home? And if they don't know, it sometimes comes out to be, well, here's the time frame that we think you should be in order for the break even to occur. So the first loan we're going to chat about today is a rate and term refinance. And why is it called a rate and term? We call it rate term refinancing. And the reason why we call it that is because you either go for a cheaper interest rate or a shorter term loan. So a lot of people would like to say, hey, I have a 30-year loan when I bought my house. Rates are 2% cheaper. I'd like to move to a 15-year, keep my payment very much the same, but now I can pay my loan off in a much faster time frame. Or my interest rate's now at 7%, rates are now at 5%. I would like a cheaper interest rate to give me a cheaper payment, so now we can use that money elsewhere to save for retirement, to pay off other bills, just to make life easier for expenses. So that's what a rate term refinance is called. The second common type of loan is called a cash out refinance. And a cash out refinance is just what it means. You're getting cash back, cash out of the equity of your home. And again, you can use that for really anything you want. We've seen people use it to adopt a child, pay off bills, finish a basement, pay off a car loan, do any kinds of financing, and some people use it to actually put into retirement as a senior or to an annuity plan. So there's lots of different reasons why someone would pull out cash, especially when we've seen home values as high as they are. And sometimes your loan is not, 50% of the house's value. So you could pull out a lot of equity. Generally speaking, on cash out refinances, you're only going to be able to borrow about 80 to 85% of whatever the value of your home is. Or on a rate and term refinance, you can borrow above that 80%. So on different types of loans, you might be able to go a little higher or a little lower, depending on its FHA or VA versus conventional. But just to give you kind of a quick general sense is on a cash out refinance, generally you want to be about 80% as the max loan. So if the value of your home is $100,000, generally speaking, you can take out about $80,000 loan. Obviously, you still need to pay off your mortgage, pay off the closing costs, but any difference between that, you would get back in hand to do what you would like to do, okay? And the last type of refinance is something that we spend a lot of time counseling with and educating clients with to assist is refinancing either while going through a divorce, before a divorce, or after a divorce is finalized. And so we spent a lot of time becoming certified, understanding the markets and the rules of what can happen while an individual is going through a divorce. And while it doesn't apply to everyone, the statistics show that nearly 50% of individuals that become married become divorced. And so it's a common situation that very much comes up. And here at Mortgage Specialists, we can help during that transaction, whether it's before your divorce is filed, as soon as you file your divorce, sometime throughout that process before it's finished, and many times after the divorce is finalized. And many clients ask, well, why would I want to handle and do a refinance? during a divorce or post-divorce is because, generally speaking, when you bought your home, you might have bought it with your spouse. And when you move forward after divorce, you want to separate all of your finances so that the other person paying the account might come late on that account and affect your credit. You don't want their financial decisions to affect your life down the road. So what we're working at accomplishing is whether we need to split the equity of the home or whether we just need to roll that home loan into one party's name, either the husband or the wife, moving forward. And we use the two products, either the cash out refinance or a rate term refinance, or one that we also commonly use is called a divorce equity buyout agreement. In that some situations are that we need to make the other party, the spouse of the divorce, give the cash of the equity of the property, or maybe split up money so that when the divorce is finalized, all assets generally are split in half. So those are the three main kinds of refinancing that we do. Obviously, there's many other questions people have about what it is and what the process looks like and time frames, and there's some laws that occur and timing of when you get cash back. Here at Mortgage Specialists, we can help answer any of these questions that you may have, from refinancing for the first time, second time, to many different times throughout your life of the loan, and give you some education to understand why you're doing it and does it make financial sense for you. We only like to do loans at Mortgage Specialists that make financial sense, where I know much of the time people will get quotes on refinancing and they find out that the closing costs are very, very expensive and it might not make sense. But what we work to strive to do every day is make sure that you become educated on what's the best financial decision for you and whether a refinance truly makes sense. Again, feel free to subscribe to us here on our YouTube channel. Check us out on Facebook, Instagram, and Twitter. We'd love to have a phone call with you at 402-991-5153, or you can read any of our blogs or videos on our website at mtg-specialist.com. Have a great week, everyone, and we'll see you next time. Mortgage Specialists. Driven, trusted, reliable.